Okay, so today we're diving deep into something that honestly sounds like it's ripped straight from a thriller. A potential U.S.-China trade war in 2025, maybe even turbocharged by escalating Trump tariffs. You sent over some, well, really eye-opening reports on this.
They are quite stark, yeah. The scenario they lay out, if it unfolds, suggests, well, a period of pretty significant disruption.
It really does. I mean, picture this.
Mm.
It's April 2025. Those trade tensions we've all been hearing about, they're not just headlines anymore. They're like the new normal.
Right.
We're talking tariffs on Chinese goods coming into the U.S. soaring past, what, 100%?
Yeah, over 100%. And China, well, they're not just sitting back, they're hitting back just as hard.
It's a huge escalation. Moves way beyond just, regular trade disputes.
Exactly. This is tariffs as weapons, economies as battlegrounds, really.
So the big question you're asking and what we really want to unpack here is, what does this kind of no-holds-barred trade fight actually do to the world economy? Are we looking at markets crashing, prices going through the roof, or does it just fundamentally change how the world trades? It feels, I don't know, like a potential earthquake.
That's the core of it. Our mission, you could say, for this deep dive is to kind of dissect those potential effects, the initial shocks, the longer-term shifts.
Okay, we've got analysis here looking at the spark, the immediate fallout, even some guesses about long-term changes. So let's get into it. What's the trigger? How does this whole thing ignite, according to these sources?
Well, the catalyst, as laid out in the reports, seems to be the Trump administration's tariffs hitting a really dramatic 104% on Chinese goods. That's by April 9, 2025.
104%. Wow.
But it's not out of the blue, right? It builds on earlier tariffs that were already up around 54%. So it's been escalating.
Right, like a slow burn that just suddenly flares up. And China's response, I mean, they can't just absorb that, can they?
No, absolutely not. They retaliate pretty swiftly, imposing their own tariffs, hitting U.S. imports with something like an 84% levy.
So tit for tat. That immediate strong reaction from both sides, that's the ignition point.
That's what really kicks off the full-scale trade war scenario, yes.
And that kind of back and forth, it must just hammer the actual trade volume.
Yeah.
One source, the Tax Foundation, mentioned a potential 25% crash in trade between the U.S. and China.
Yeah, a 25% drop. That's huge. We're talking, what, around $825 billion in trade just potentially evaporating?
$825 billion. That's
Right.
a massive hit to businesses, supply chains, everything.
Absolutely. Think about the disruption. Companies relying on that flow of goods, access to markets. It gets choked off.
And the markets, sanctioned markets must react wildly. The reports mentioned like an 8% slide overall.
An anticipated 8% slide. And one example was the Dow Jones dropping 8% in just a single week.
In a week. That signals some serious fear, doesn't it?
Oh, definitely. It reflects deep uncertainty. Investors see the world's two biggest economies basically at war economically, and, well, confidence evaporates. You see sell-offs.
It really feels like the reports are saying we'd be in this new era.
Yeah.
Tariffs as weapons, economies as battlegrounds. A total shift.
It is. Trade stops being primarily about, mutual benefit or efficiency. It becomes a tool, a weapon in a geopolitical struggle.
Okay, so the war is on, tariffs are flying. Who feels the pain first? Where does it hit hardest initially?
Well, it's pretty widespread, but U.S. consumers could feel it directly. That Tax Foundation estimate, an extra $2,000 per year on average for U.S. households.
$2,000 just from higher prices on imports.
Yeah. Think about electronics, clothes, toys. A lot of everyday stuff could get noticeably more expensive.
That's a real hit to household budgets, isn't it? Forces tough choices.
It absolutely does. And it's not just consumers. What about U.S. businesses that export to China?
Right, they must get hammered too.
The reports estimate maybe 150,000 U.S. jobs tied to those exports could be lost.
So you might gain some jobs if production comes back, maybe, but you lose others in exports. It's a painful trade-off.
Exactly. It's not a simple equation. There are winners and losers within the U.S. economy itself.
And China. How do their factories react to losing such a massive market?
Well, they definitely face difficulties, huge difficulties. But the analysis suggests they might try to pivot, look towards, say, European markets, other emerging economies to try and make up some of that shortfall.
Makes sense. Businesses adapt. But what about, smaller countries? Are they just collateral damage in this fight between giants?
Many are very vulnerable, yeah. The sources use Australia as an example, potentially losing 1% of their GDP if global trade just stalls out.
A full percent of GDP. That's significant for a country like Australia. It shows how interconnected everything is.
Totally. And the global picture. Bloomberg Economics estimated, what, a 0.8% hit to global GDP?
Which translates to $1 trillion.
$1 trillion lost economic output globally.
Wow. Just gone. That's a massive drag on growth everywhere.
It's a huge setback. And then there's inflation. We have to talk about that.
Right. Higher tariffs mean higher costs for businesses importing things.
Which they almost certainly pass on to consumers. So yeah, rising inflation globally seems highly likely.
Okay, so the picture is not great, to put it mildly. But the big question, the one everyone's wondering, could this actually tank the world economy? A full-blown global recession?
Well, the analysis tries to distinguish between a really deep dent and, like, a total meltdown, especially at first. Goldman Sachs put the odds of a U.S. recession by Q4 2025 at 50% if these tariffs stick.
A coin flip. 50-50 chance of a U.S. recession. That's serious.
Very serious. And a U.S. recession inevitably drags the rest of the world down. The OECD projected overall global growth might slow to maybe 3%.
Which is pretty sluggish, right, compared to normal.
Yeah, it's a noticeable slowdown.
Right.
Affects jobs, investment, everything.
And what about just uncertainty? That seems like a huge factor in itself.
Oh, massive. Uncertainty basically freezes things. Businesses pause investments, hiring, consumers get nervous, pull back spending, it chokes off cash flow.
It's interesting, though. The reports suggest it's not necessarily 2008 all over again, at least not right away. What's the difference there?
Well, 2008 was fundamentally a financial system crisis, right? Toxic assets, banks collapsing. This trade war scenario starts in the real economy, barriers to trade, disrupting production.
Okay.
But, and this is crucial, prolonged trade friction could definitely spill over and cause financial instability down the line if businesses fail and debt piles up.
Right. So maybe not an immediate financial meltdown, but the economic pain is real and the risk of something worse is there.
Yeah.
Okay. Are there any bright spots, any silver linings at all in this scenario?
It's mostly gloomy, but interestingly, some analysts do predict a possible upside for U.S. jobs. Maybe 300,000 jobs gained if production actually moves back to the U.S. to avoid those tariffs.
300,000 jobs. So the America First idea might actually create some domestic jobs in manufacturing.
It's a possibility, but again, you have to weigh that against the potential losses in export sectors we talked about.
And the goods made here might still cost more, right?
Exactly. So consumers might not feel the benefit directly, even if some jobs are created.
What about China? Any potential upside for them long term?
The thinking is they might be forced to really double down on boosting their own domestic market. More internal consumption, less reliance on exports.
A forced pivot inward. That could fundamentally change their whole economic model over time.
It could. Greater self-reliance, maybe, but that transition would be bumpy for sure.
And there was this counterintuitive idea. Potential for more efficient supply chains in the long run. How does that work?
Well, the idea is that this massive disruption forces companies to completely rethink things, maybe move towards more regional production, closer to consumers, or invest more heavily in automation.
So less reliance on these long, complex, potentially fragile global chains.
Exactly. In the long run, maybe that leads to more resilient, perhaps even more efficient systems, but the immediate effect is disruption and higher costs while that shift happens.
Right. Lots of pain before any potential long-term gain, which itself isn't guaranteed.
Precisely. The short to medium term is overwhelmingly negative.
So if this 2025 scenario actually happens, what should people, our listeners, be thinking about? Any practical advice from these reports?
Well, on the personal finance side, there's the suggestion to maybe hold a bit more cash. Markets could dip maybe 8–12%, so having liquidity provides a cushion.
Right. Cash gives you flexibility in volatile times. What about just shopping? With prices going up, potentially 10% for things like phones.
Yeah, the advice is basically smart shopping. Be more mindful. Maybe delay non-essential purchases, hunt for deals. Budgeting becomes more important.
Sounds like belt-tightening might be necessary for a lot of folks. Are there any winners in this scenario, like countries that might benefit?
The reports point to places like Mexico, maybe some Southeast Asian nations, as companies look to move supply chains out of China.
They look for alternatives, and Mexico's right there, trade agreements in place.
Exactly. They could see increased investment and demand, so one country's loss can be another's gain, potentially.
It really highlights that adaptability is going to be key for everyone, isn't it? Businesses, individuals.
Absolutely critical. Agility in adjusting strategies, supply chains, spending habits.
The reports also raise this idea of the world splitting into trade blocks, a U.S.-led one and a China-led one. What would that even look like?
It could mean more barriers between the blocks, less efficient global production overall, slower tech diffusion, kind of an unwinding of globalization, really. Businesses might face totally different rules depending on where they operate.
And companies moving supply chains to, say, Mexico or India, that's not free, right?
No, definitely not. Setting up new factories, logistics, dealing with new regulations, it costs money up front. So you might gain resilience, but maybe at the price of higher overall production costs initially.
It really paints this picture of a long-term shift, maybe more localized, regionalized economies, driven by this conflict. And the reports use the word scars. What kind of lasting damage are we talking about?
Well, beyond the obvious economic hits, lost GDP, jobs, it could erode trust between nations long term, make global cooperation harder.
Right.
It could also lead to permanent shifts in how businesses operate, how consumers behave, even geopolitical alignments. These things might not just snap back even if tariffs eventually go away. The psychological impact, too.
So wrapping up here, this hypothetical, but as the report suggests, plausible 2025 trade war paints a really complex and, frankly, pretty concerning picture. It's not just tariffs. It's ripples affecting everyone.
It truly is. Consumers, businesses, the whole global economic structure. It highlights the risks of intense protectionism.
And for you listening, this deep dive really just underlines the need to, well, stay informed. Be prepared for shifts. Think about how these huge global changes might actually touch your own life, your work.
Understanding the potential fallout helps make better decisions, whether personal or business. It's about navigating that uncertainty.
And it leaves us with this provocative thought, doesn't it? If global supply chains do become less reliable, more expensive, what new ideas, what innovations might pop up locally in our own communities, our industries?
That's the key question, isn't it? Disruption often forces creativity. New solutions emerge out of necessity.
It's a challenging future to think about, for sure, but maybe one that forces some creative thinking. We've really only scratched the surface today, drawing on the info you shared.
There are definitely many layers here.
Yeah, and we encourage everyone listening to dig deeper into these trends, consider the ripple effects.
Absolutely. These sources provide a solid starting point for understanding what could be a really transformative economic period.